Good morning. It is Friday, August 30th, the last day, trading day in August. So we're going to wrap up August. It is also today Warren Buffett's birthday. So you know what I'm going to do? I'm going on Webull right now, live, okay? I'm going to go and look up BRK.B. It's at all-time highs. We're going to buy one share of BRK.B, okay? It is now trading at, let's see, $469.99. I will trade. I will buy quantity, one share. Next, buy. Extended hours, include extended hours, confirm. I just bought one share of Berkshire on Webull. If you're like me and you like trading or you like sports betting, okay, the best thing I can tell you is Webull. I love Webull. I love sitting on the couch. I put $1,000 in there. It is now $8,000. I just looked at it this morning. It's $8,000. I don't usually look at the cash balance or anything. I look at the total balance, but I've got $8,000 in there. If you want to join Webull, okay, it's the fourth link down here. It is fantastic. I really, really like it. I enjoy it more than my sports betting because I'm actually better at stocks than I am sports betting. But Warren Buffett's birthday, I think it's 94 or 96. I'm not quite sure, but I just bought one share on Webull. Let's talk about the markets because everything looks good right now. Again, maybe I'm wrong on this. We're right at 474. Yesterday, we had decent candles in the morning, 0.6 on the Qs. The Dow closed at all-time highs. We can talk about it. This morning, before we take a look at the charts, I want to go over PCE, okay? This is the Fed's favorite inflation gauge. It came in at 2.6 where expected was 2.7. Good news is good news. This pushed the markets up. Do I expect this to stay? Probably not. I don't think so. I mean, it's Friday before a long weekend. We're off on Monday. There's no market on Monday. I won't be here on Monday. I may do something for the paid subscribers on Monday. But probably I'll just, kind of hang out on Monday. There's nothing. So it's boring. Again, where are we with pre-market? We're up 0.75 on the Qs. That puts us at 474, and it's right between my 450 and 500 range of the Qs. And again, if you didn't listen yesterday, and I don't expect you to listen every day, but if you didn't listen yesterday, I'm going back to last year at this time where we saw 3 different 8% drops on the Qs. So, and we saw the pops like we just saw from 446 up to 483, 484, and we saw that pop. We're now looking like it's sliding, but the news is good. We had great earnings last night. We'll go over some of the earnings from Dell, from MongoDB, from Ulta, which actually crashed. We'll go over some of those. Yeah. What have we, here's the thing. Look at the different indexes, okay? DIA, which is the Dow Jones Industrial, is up 9.83% this year, okay? IWM, year to date, up 9%. QQQ is up 14%. Your VOO, and if you trade options, you trade SPY. But if you're going to invest, I guide you towards VOO, and the reason is VOO has a lower expense ratio. It makes pennies difference on when you buy it over a long term. But money is money. Again, money is money. So VOO is actually, the S&P 500 is the year-to-date winner so far. QQQ is no longer the winner. And that's because we've seen this pullback since August 21st. And you've seen it pull back. Now, I would argue, what have we seen? What have we seen from this week so far? We saw Affirm, buy now, pay later. Killed it. Are people putting off payments? We saw Dollar General say the lower consumer is weak. Yesterday, they were down 25%. We saw Lulu saying that they needed to redo everything. And we saw Ulta, the makeup, the lipstick gauge that Warren Buffett just bought. They were down 10%. We'll go over that one as well. We're seeing the consumer is weak for some brands. NVIDIA killed it. Dell killed it. MongoDB killed it. And Best Buy killed it. So some brands are doing fine. Others are just, not. Plus, we saw my favorite stock of the year, SMCI. We'll go over that one in a little bit. But let's take a look at the Qs. The Qs, you're seeing a little downside. You're seeing the Bollinger Band cinch up. You're seeing the MACD kind of come down. You're seeing the RSI at 48. That's no man's land. It's not giving us a clear direction of where we need to go to actually be. It's just in this no man's land. So on a Friday, the last day of the month, before a long weekend where Monday's closed, do you want to buy anything? If you're buying anything today, I would say it's short term. Do not buy something long term today unless you are dollar cost averaging every Friday, which I'd never suggest anyway, because I'd rather dollar cost average on Mondays. But if you're dollar cost averaging on a Friday because it's payday and you get paid and you dollar cost average into Qs, go ahead and do it. But other than that, I would say wait. The market's just not telling us anything. I haven't done anything. Honest to God, this week has just been, the buy of Berkshire Hathaway in honor of Warren Buffett's birthday was the first one that I did. I didn't look at the price. Berkshire Hathaway is just one of those stocks. You just buy it. If you want it, you're going to hold it forever. You just buy it. I don't know. Maybe I'll sell that later this year. Who knows? At a loss. But it's one share. Again, it's one share of $400. Not that big of a deal. But let's take a look at SMCI because this one, again, it's my favorite stock of the year. Where are we today? We're putting in some inside candles. This August 28th, this one was when the short seller report came out. This was a 13.6% candle from the high, $487 to the low of $395. If you got this at $395, you're probably okay. But there's an article in Seeking Alpha, and I want to point this out because this is a very good article, okay? It's Henrik Alex. He does a great job. Delayed annual report is a major red flag. Okay, this was 11:53 Thursday night. So I'm sorry, Wednesday night. After that delay, I read this article this morning, and I want to read the end part of it while we look at the chart. Okay. As a reminder, he goes over everything, the valuation of SMCI. He goes over the ballooning generative AI investments that they have to do. He even goes over that they may have to dilute shareholders. Remember, he's selling it. Okay, he's selling it. He's up 2.97%. It's up 2.97% since he said sell. So was he too soon? I don't know. But I'm going to read you kind of what I thought was the most important thing in the article. As a reminder, it took Supermicro several years to address revenue recognition issues originally discovered in 2017. There was a short report in 2018 that was very similar to the Hindenburg one. The inability to file timely financial statements with the SEC resulted in NASDAQ delisting the company's common shares in August 2018. Okay, with the assistance of external forensic accountants, Supermicro filed restated financials with the SEC in 2019 and managed to relist in NASDAQ in early 2020. Should the company's auditors and management indeed discover renewed revenue recognition issues, Supermicro might very well be required to again restate years of financial results. For my part, I do not expect the company to file its annual report on Form 10-K within the automatic 15-day grace period. Remember, they delayed it on Wednesday. They have 15 days to report it. Given the company's history, auditors will likely require a deep dive into revenue recognition procedures, which could take several months or quarters. So this isn't something that's going to be, I agree with him on this one. It's not going to be, all of a sudden we see roses and rainbows in a couple of days because they report something. This could take a very long time. And so when we take a look at a long-term chart of this, do I think it's worth it to sit in this? I don't know. I'm with profits. I'm sitting in it. I think at 500, I'll probably get out with the losses. At 448, I think I'm willing to take the chance that it goes down to 400 again in order to see if it goes to 500. It's just a guess. There's no artistry to this. There's nothing more than just the MACD on this weekly is super low. It's an oversold stock with the RSI at 37. Just something that I'm looking at. Again, it's up 2% today to 460. I don't think that this does not fit in the realm of any reaction is an overreaction. This is in the realm of absolutely 100%, if they did fraud, then this is probably going to get delisted and you're going to see this stock just trashed. Okay? We saw Dell come out last night with great earnings. They killed it. They killed it. And here's a great chart from SMCI, from Trendspider. Bulls have confidently supported the stock at 20 times earnings for over a year. Is it time for them to start accumulating again? Look at this. This is the PE of SMCI. And as it gets down there, they are absolutely having to start. They started buying, and that's when it took off. Now, is this the same territory? No. You've got an investigation. I would not tell anybody to get into this stock brand new. I would say if you're sitting there holding, it's worth sitting there holding. But again, my risk tolerance is different than yours. So to prepare you for any kind of soft or hard landing, remember, that's what we're looking at. That's why I got out a week ago. That's why I pulled 5% of my portfolio out of the market, is because we don't know if we're having a hard landing or a soft landing. What that means is, are we going to go into a recession because the rates were so high for so long and it killed the job market? Or is it going to be a soft landing where the job market goes back to 4% unemployment rather than 4.5, and we see this great upward trend of the market? That's what we're trying to gauge, okay? There's no clear sign yet, but JP Morgan outlines how 12 asset classes perform during, depending on why the Fed cuts rates. Is it a hard landing or a soft landing? And they look, U.S. growth equities, U.S. large cap equities, international equities. This is a great article for you to read. U.S. core bonds, 2-year treasuries. The 10-year treasury, soft landing, gives you 6.2%. Okay, hard landing gives you 8.8. There's no difference. 2-year treasury, soft landing gives you 7.4% return. Hard landing, 6.3. It's showing you that bonds are pretty good when it comes to returning equity. Now, U.S. growth equities on a soft landing gives you 20.4% return. Hard landing, you lose 0.3%. So there's a big difference in a lot of these sectors. This is a great article to read. I suggest you sign up for the newsletter and read it. How can you sign up for the newsletter? It's right here on Linktree. It's the 5th one. Right here, dailystockpick.substack.com. And you get it for free. I will include that article for free, a link to it, in the newsletter. So sign up for the newsletter. Let us help you grow. That's what this song says. Biggest movers of the day. We talked about how Lulu shares were crazy. Lulu rose. It's up 5% now. This was down like 10%. They missed and guided lower. But when they got on the call, they said, you know what? Hey, it's not that bad. It's not that bad. MongoDB, they mentioned AI 40 times, 50 times. Boom, 15%. Dell, they increased their server. This is why SMCI is such a head scratcher. The SMCI did really, really well. Their margins came down, but Dell's margins didn't come down. Dell just killed it on the server space. Marvell Technology, another semiconductor, rose more than 7% after the semiconductor infrastructure company posted full quarter results, guided higher. 5% year-over-year decline in revenues, but they guided higher. So there's just some things in here that are a little confusing. And before a 3-day weekend, you don't want to jump in and say, "Oh my God, I'm feeling FOMO." Patience. We talked about patience. We'll go over some stuff again too. CrowdStrike. Okay, this is this got another indication in the 4-hour algorithm that we're going on a bullish run. Okay, the 4-hour algorithm is a strategy. It's based on the MACD. It is in Trendspider. Trendspider is having a sale. I give you the 4-hour algorithm to guide you, to help take emotion out of the trade. Because the one thing that you can do is look at a chart, and it's the price, and it's the movement. And if you learn that movement, you can make better trading decisions. So Trendspider, the top link here on linktree.com. They have a sale going on for 3 more days, okay? There's 3 tiers. The standard, they give you nothing off. There's no reason to get the standard right now if you're looking to, hold off on this. It's $53 a month, but for $54 a month, you're saving 45%. Okay? Plus you're getting 6 months free. That's crazy. For 1 year, $54, you're saving 45%. Okay? It's $54 a month. What do you get? You get 1 license, you get 10 active windows, 100 simultaneous alerts, 90 max alert lifetime. Maybe this means nothing. But again, you can get this with Trendspider. I use it on my screen all the time. So you should be able to see exactly what it can do for you. We'll go over one stock that has a crazy return versus buy and hold later with the scans, because I give you all my scanners. I give you my watch list. I give you everything. We'll go over some stuff. Now, if you're new and charts make no sense, I would urge you, if it's within your budget, and yes, it's a lot of money, but they give you unlimited one-on-one training from a product expert at Trendspider for the advanced tier, $82 a month. Okay? It's 1 year. I guarantee you, if you get unlimited one-on-one trading and you go for the training once a week, use it like a piano lesson. Go once a week. Schedule it once a week. They'll set you up with a guy who can help you. You can go over your trades, and you can, they can't give you financial advice, but they can give you ideas about, okay, here's what you could look at in the system. Here are other things that maybe we could look at to see where the price is going. This is what you want set up. Say there was an insider buy and you missed it. Well, here's how to set up your insider buys. Say there was Nancy Pelosi bought some calls on it. Boom, you can get that in Trendspider. So Trendspider has so much information. I would guide you towards this advanced tier to use it. I don't use half of it, but I've got my system down to where I actually make money. So I'm pretty happy with my system. If you don't have a system and you're new to technical trading, the advanced tier is what you want. Now let's look at CrowdStrike a little, because this one is one that's it shot up. Okay, yesterday when I was on the air, it was down after their earnings. They announced that they're going to give discounts to people that were screwed up by their update. And so, they took revenues down. And then yesterday it was up like 10% after the bell opened. Okay? This is a crazy, crazy stock. We do have some upward movement. You're trading with confirmation. It's above the 9-day. Very simple. Bollinger Bands cinched up. Where are we going? We're going up. When you see the Bollinger Bands cinch up like this, when they contract and they're tighter, you typically have movement. Look at this. Okay, it didn't know that they were going to shut down the world, but the Bollinger Bands traded very tight. You were on the bottom side of the 9-day, and you moved down. Now, when did you move up? When the Bollinger Bands contracted a little bit, and you were on top of the 9-day, and you continued to move up. And yes, we continue to move up. So the algorithm here, if you trade it in the algorithm, you make 54% versus 42% buying and holding over 24 months. Now, what I want to bring up is when you go and look at the cybersecurity hack. Okay, this is an ETF with the hack. When you look at a weekly chart, and Trendspider posted this. So I didn't create this chart. I didn't do it, but I will put their chart in the newsletter. Okay, when you look at this. When you find out that, hey, here's an all-time high at 67.97. Okay, we're going to put that up there, 67.97. When you have a boom, okay, one time it hit February 2024, then we pulled back. And then the second time you hit it is right now. Okay, it's up there right now. Is this going to be resistance, or is this going to be the start of a breakout? That's the question. Pick your winner. Now, I'd say MACD is lower than it has been in the past. Remember when it cleared off, it bounced off of how high it was on the MACD, how high the RSI was. It's lower. We have the ability to break through. When you break through, old resistance turns into new support. You hear me say that all the time. So again, I just think it's an interesting play. One that I thought was interesting too. And I will bring this up. I am not a fan of this stock. I am just bringing up the current run that we're in. And it's crazy, is PayPal. Okay? PayPal is up 0.5% today, but it has been on such a run. Look at the algorithm. It gets you in at 63 there. Okay, we're at 73. I sold out, I think, at about 65 or something. I didn't trust the run. I didn't trust anything. I got out. I said, I'm out. This stock over the long term has not been a winner. I don't want to time the bottom, but look at the Bollinger Bands here on a weekly. We just broke out above the 9-day. They're trading above the Bollinger Bands. I'd say this 76 is probably your next resistance. Okay, you're trading at 70. Let's see, live trading right now in pre-market, you're trading at 73.64. That 76 is most likely resistance. If you break above there, I would say you're going to look at probably 90 on this stock. Now, it's not a crazy, crazy stock. The valuation isn't nuts. It's a little nuts, but this is rated in the quant number 1 out of 44. And this is my other tool, Seeking Alpha. This is how I gauge fundamentals. Again, technicals are Trendspider. Fundamentals are in Seeking Alpha. And when you look at this, the PE is 14. That's not crazy. But when you look at the PEG, it's 1.38. The sector is trading at 1.26. So their growth has to pick up. Their growth has to pick up. I sold out of this space. I'm just bringing it up. I am not trading this one, but I think it's interesting. Okay? Again, the biggest loser is Ulta. We can talk about that one. 10 of the top hedge fund stocks. Number 10 is Eli Lilly. Number 9 is Hess. Number 8 is Uber. Number 7 is Taiwan Semi. Number 6 is Nvidia. Number 5, Apple. Number 4, Google. Number 3, Meta. Number 2, Microsoft. Number 1 is Amazon. I continue to think that Amazon is your best play into AI. I think Amazon is one of the best plays. Now, when you get to 200, Jeff Bezos is going to sell. Do you want to get into this? I would say no. I would say right now, we talked about confirmation. It's on the bottom part of the 9-day, and your Bollinger Bands are cinching up. You want to wait for confirmation to buy this, and you don't buy it on a Friday before a long weekend because Amazon is a long-term buy and hold, in my opinion. The algorithm will make you 20%. Buying and holding makes you 30%. So if you want to trade it on the algorithm. Okay, you just got out with like a 1% gain. I don't know what that thing says. I can't read it. I got old eyes. But another trading idea, ironically, the trading desk. And we can go and look at the trading desk. Okay, I saw an article yesterday and I didn't write it down. I didn't bookmark it. But the campaigns are doing more online advertising. Where does that advertising go? It's 3 places. It's Trading Desk, Pubmatic, and Magnite. And if you want to know how I found that, you go over to Seeking Alpha and you go to peers. Okay? Pubmatic, right there. Oh, it didn't pull up the right ones for some reason. I don't know. I guess Seeking Alpha did it differently on the app than it did on the computer. But PubGY, what the hell is PubGY? Advertising. I think that Pubmatic and Magnite are the 2 others that you could look at. But again, Trading Desk, 10 out of 31. It's a hold. The valuation is what they say is bad. 74 is the PE. Your PEG is 2.59. So it's a little bit expensive. But let's look at Pubmatic, PUBM. PUBM is another one. When we look at it, they're not making money, but their PEG is 0.12. So their growth is but it's a sell in the quant. And it's because their growth and their momentum is bad. When we go and look at Magnite, which is MAGN, okay? I'm MGNI, sorry, MGNI. Why am I thinking that? MGNI. You can see it's a buy from quant. It's a strong buy from Wall Street, but be careful. There's only 11 analysts that cover this. Their average price target is $17.50. Now, the quant says it's fine. The quant says it's a buy. You're paying 22 on the PE. This one might be a better buy. I think they have something to do with Netflix. I think that's what Magnite is known for. It's one of the big ones where they've got a hold into one of them. But again, if the campaigns are spending billions of dollars looking at advertising online, it's a trade idea. I think it's a great trade idea. Look at the revenue, annual revenue from this one. Again, if you want to do it, this is a small cap stock. Remember, it's a $1.93 billion market cap stock. The trading desk, much larger. This is the king. This is a $50 billion market cap stock. I'm a large cap tech investor. I'd probably take the trading desk over Magnite, but that's me. So, again, you got to look at it. Now, another one of the Mag 7, Meta. I was on Spaces the other day screaming that Meta's a buy. Meta's a buy anytime you get close to 500. If you don't own Meta and you want to own Meta, then just get it when the algorithm tells you. You can see it just got you out with a 10% gain. Just got you out with a 10% gain if you want to trade it. You know, the algorithm makes you 132%. Buying and holding makes you 225%. This is not a crazy, crazy stock. You can look at it. Here's an article that outlines perfectly, okay? They created Llama, which is a large language business model. There are several businesses that are using, including AT&T, Accenture, Dash, Goldman Sachs, and NVIDIA even promoted that that Llama is great, okay? There are 64 analysts that cover this. Their average price target, $569. That's 10% above where we're trading today. Has it gotten there? The 52-week is only up to $544. You're trading at $518. If you buy 2 shares of this, okay, say you want $1,000 in this, because not a lot of people are putting tens of thousands of dollars into each trade. Okay, if you are, then I would say dollar cost average your way in. I think you'll get a chance to buy this closer to 500 in the month of September, just because I think it's going to get brought down a little bit. There's going to be something to do with the Congress and with Zuckerberg's letter out there, and it's going to bring it down closer to 500. But if you're just buying a couple of shares, think about it. The difference between 500 and 518, $32 if you buy 2 shares. That's what, lunch at Kava? Lunch at Kava. Now, the algorithm says to stay out of this one just now. The MACD's kind of just down there. The RSI's at 47. It's Friday before a long weekend. Don't go and buy it. Don't go buy it. So let's talk about some earnings. Autodesk software platform. I think this one was interesting because I think it gives software. Again, they're up 4% in pre-market. They full year guidance above analyst expectations. I think this gives some software like Palantir, okay, some room to run. Palantir's valuation is crazy. Snowflake, I think it gives them some room to run. Their valuation is absolutely crazy. Both of those that I just brought up had their earnings, okay? Snowflake has a gap here from earnings up to 134. It's trading at 115. Do you buy it today? I'd say no. But I think software with the CRM results and Autodesk, I think it's starting to turn around a little. It's still expensive. So mind you, it still has room to go. Do not go balls deep on software. Wait until to pick your winners. You can buy an ETF with software in it. You can do what we did yesterday, which is find an ETF. But again, I think this one was interesting. Lululemon beats profits view, but lowered full year 24 guidance. They're up 4%. How does that make sense? Well, it's because they were beaten down so much. And when they got on the call, the management said, hey, we've got this under control. We're going to do this, blah, 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 blah. I don't believe them. It's still an expensive stock. But look at this chart, okay, on the weekly. On the weekly, the 50-day still moving down. The 200-day is leveled off. Your MACD is way below its oscillator. It's crossing up. And the RSI is at 33. This is just an oversold stock. Doesn't mean it can't go lower, but it's just an oversold stock. So any decent news is going to bring it up. Because, again, the profitability, they still have a 58% margin, okay? But the PE is 19. The average in the sector is 14. Your PEG ratio, 0.31. That's the trailing 12 months. But because they took their forward guidance down, the PEG ratio got more expensive. And it's 24% above the sector. I think there's plenty of others that are better in the consumer discretionary. Ralph Lauren, Tapestry, Under Armour, Movado, PVH, Under Armour, again, Under Armour UA. I think UA is the one that you want. But again, I think there's plenty of others out there. I just think that one got a little talk. Now, one that I do like, Dell. Dell perks up on Q2 results top expectations. In the quant, Dell is a buy. They beat on servers. Servers and network grew 80%. They are beating SMCI based on scale. Okay, understand SMCI is a very small company. Dell is an enormous company, $78 billion market cap. The valuation, not crazy. The PE is 15. You're only trading 15. This sector's trading at 23. Your PEG ratio with growth, 1.21. Sector's trading at 1.9. It's great. Now, the revisions kind of hurt it. Okay, when analysts take their estimates down, it kind of hurts it. But when you take a look at the rating and you take a look at Wall Street, there are 23 analysts that cover this, decent one. Their average price target is 152. Now they've chased this up. It started to come down. They've chased it up. So understand that I think you're going to meet in the middle, but I think this is a $140 stock. We can take a look at the chart in Trendspider. I think it's $140. I like this company. I like what they're doing. The problem is the margins are going to get brought down, and you're going to see this. Hey, how long can AI and how long can these hyperscalers really kind of blow this stuff out? You know, again, an analyst, here's an analyst, strong buy. AI servers will likely represent 15% of revenue very soon. Upgrade to small buy. Now, the key point in this one, his closing thoughts. The stock price is significantly undervalued based on my model. Therefore, I'm upgrading to strong buy with a 1-year price target of $190 per share. So he thinks within 1 year, it will get to $190. And this analysis is great. He goes over everything. So I like Dell. I'm in at 113. It's trading at 112. I'll probably add more. MongoDB, they beat. They beat and guided higher. The stock up 10% in pre-market. I think the market's now open. So MongoDB, here we go. MongoDB, look at that candle. You're going to have a gap. You're currently filling the gap to 305. That may get to 305 today. You're filling this gap. Now, this gap is going to get filled on the way down. Do you want to buy it today? I'd say no. You know, we talked about how I was feeling bad about selling Ulta. I was right. Warren Buffett bought it. It ran up. It's down 5% now. Ulta is what I expected them to be. It's just ugly. They missed on revenue and earnings per share. They cut the guidance for the year. Same source sales were down quarter over quarter. It's ugly. So what do you want to take from that? Maybe it's time to buy Elf. Elf had a really good quarter. You want to trade this one on the algorithm. Again, the algorithm makes you 95%. Buying and holding made you 304%. Is this one getting pulled down? I think it's getting pulled down by nothing more than it's just run too much. But every time it's dipped under that 50-day on Elf, you've been able to get it. They announced a huge buyback for them. So if people are selling, where are they selling into? They're selling to the company. And the valuation's a little bit crazy. A little bit nuts. But with Ulta missing, where are people going? They're probably going to small caps like Elf to actually buy. That's where Ulta's probably losing it. This company's market cap is only $8.46 billion. It's not huge. And it's run up over the last 5 years. Look at that. I mean, this company was nothing. In 2017, you were trading at $8. Today, you're trading at $151. Wall Street says it's a buy. There's 15 analysts that cover it. Their average price target is $221. They chase this up. It will probably come down. My guess is that you're probably back at 200 before the end of the year with the price target. But it's one of the most shorted stocks out there. Marvell Semiconductor, they killed it. Marvell climbs as Q2 data center revenues double. Okay? They mentioned AI probably about 40 times. So I like it. I like it a lot. Now, education. This is a quote from Tudor Jones that Steve Burns just posted. I'm looking for 5-to-1 risk reward. 5-to-1 means I'm risking $1 to make 5. What 5-to-1 does is allow me to have a hit ratio of 20%. I can actually be a complete imbecile. I can be wrong 80% of the time, and I'm still not going to lose. You want to use a risk-reward calculator. Trendspider has a free one. And remember, you can't blindly buy things. So if you're new to trading, use this free risk-reward calculator on Trendspider. It's free. I'll link it in the newsletter. So say you want to buy Elf today at $151. Okay? the free risk to reward calculator, you put in the price at 151 and say you want to make, 10%. So what's 151? It's 15. Say it's $15. Say you want to buy it 150, and you want to make 10%. So that's 165 is your price target. Okay, your stop loss you want to have at 145. Calculate. What is that? Let's see. That's a 3-to-1 risk ratio. Okay, your potential loss is $5. Your potential gain is 15. You can put in your actual, times it by the actual price, but that's how you use this risk reward calculator. Your required win for consistency is 26%. That's not bad. If you just want to use that, you can do it. But remember, you can't go into trading blindly. I personally make this mistake all the time. But when you buy something, you should know your upside and your downside. You should, and you should know your time frame. Because if it's a long-term, say you're buying, in your brokerage account. Say you're buying Apple in your brokerage account. I say all the time, just buy Apple. Buy Apple. Just don't sell it. Just buy it. Well, you got to know where you want to sell it, okay? Because at $230, that is extremely expensive for Apple. I was looking at this yesterday. I'm like, there's this gap up here to 233. Did we hit 233? We hit 232 and bounced off. We haven't filled that gap. So, but again, I want to be smart about when I buy and when I sell. I'm not buying Apple. But if you're buying Apple up here, where's your upper price? That's what you've got to put in. If your upper price is 250, what's your time frame on that? Because it's extremely expensive. So when you use one of those calculators, it gets you into the habit of identifying the upper and lower. Now, what's Apple's price target on the street? It's 235. So 250 would be out of ridiculous, maybe it's next year that it's 250. You've got to put your time frame out. But if you're targeting 250, you better have a reason for it to get to 250. When Wall Street's saying it's worth 233, or what is it, 235, and you're saying it's 250, why? You better have a good reason. And you better use stop losses. Because the upside on something like this, I don't think there's a huge upside. I think there's more downside. I think when you buy at the 212, 213 level, I think that's a much better upside. We can see it on a weekly here. The weekly chart, Bollinger Bands are wide open. You're trading at the top of it. You want to trim this at all-time highs. You want to trim. So let that be a lesson. Again, Paul Tudor Jones, 5-to-1 risk ratio. He can be wrong 80% of the time, and he's still going to make money. So that's how Trendspider can help you. Again, when you use this, you can back test. When I use the 4-hour algorithm here on Apple, it makes you 34%. What do you make when you buy and hold? 38%. Okay? You're in at 216. I use this to find my entry points. If I don't find an entry point, Costco is a great example. You're at 893. Do you want to buy Costco at 50 times earnings? 50 times earnings when the average Wall Street price target is 1% below? Do you want to buy it at 893? Don't get FOMO. Don't buy at these all-time highs. Use a risk reward calculator, set your top limit, and set your stop loss. The algorithm said get in at 892 here. The initial buy was 831, and it got a secondary bump up here to 892. And what'd you hit in this candle? You hit 918. Okay? That candle knew, hey, there's a bump up there, but it didn't know the upside. It just said, hey, the algorithm makes you 33% versus buying and holding in Costco makes you 64%. You can use it to find good entries. Now, was this 892 a good entry? No. You're at all-time highs. There's no reason to buy at all-time highs. Buy 10% below the all-time high. Okay? That's a decent one to do. And then set the all-time high as your sell on the risk-reward calculator. That's how you do it. That's how you do it. Again, you've got to find your way of doing these things. I think that's the best way to do it. There's SoFi. We were looking at SoFi at the live thing. Let's go over some of the social requests. James Beach from Down Under. Aye, mate. I think it's New Zealand. I think these guys are in New Zealand, not Australia. I always say it's Australia, but I think these guys are. Love the U.S. stocks. That's where most of my. By the way, I sent him the Team America, America, fuck yeah song. If you just want to Google it, it's from the creators of South Park. It's America. Just type into Google America, fuck yeah. Love U.S. stocks. That's where most of mine are. But have a look at a couple of my favorites outside the U.S. Clarity Pharmaceuticals, CU6. Oh, these are all trade now. I can't even look at these. CU6. Does this come up? CYL is one. Does it even come up? No. I can't look at them. They're Australian. It's not going to be worth it. But I love hearing from down under. Down under. Australia's one of my favorite countries. Love it. Love it. From Spotify, Lance, what do you think of Backblaze? BLZE. BLZE. I've been holding 200 shares at an average price of $6.91. I think you're losing. I think you should be using something like the algorithm that makes you 7% versus losing 17% holding for 24 months. My guess, and without going to a weekly, I'll just guess, this is upper left to bottom right. I will look, I mean, again, we don't have a 200-day. It's 2 years old, so it probably was an IPO. This is why I don't like IPOs. I like to have, at least on the weekly, I like to have a 200-day so I can see it. You're trading below the 50-day. Bollinger Bands are cinching up. I still think you've got some sideways going on here. You're at the point at $6.26 that you're kind of, there's no real clear indication where this is going. So from a chart perspective, I would say there's no clear indication of up or down. You can see, if I had to pick, I'd pick down. We're on the downside of the 9-day. You've got a gap down here to $5.37. The 200-day is moving down. The 50-day is starting to move down. Your Bollinger Band's just cinched up, but you're on the bottom part. Now the RSI is at 42. It could still go down. Could still go down a lot. You had your earnings, so the catalyst is probably gone. But let's look at some of the fundamentals on this one. We can see that Quant says it's a hold. Okay, we can look at Wall Street. There's 6 analysts that cover this. Useless. Absolutely useless. 6 analysts, nothing. This is a company that has a $261 million. The aquarium makes more revenue than this company. Again, than their market cap. Storage Cloud Pattern provides businesses and consumers cloud services to use, protect their data in the United States and internationally. It's a cloud. It's information technology. It's ranked 11. If we look at the quant, why is it a hold? Well, we can kind of see that the valuation isn't great. Looks like it went to a buy on 8/29 today or yesterday. So it might just be going back and forth in between there. Remember, the quant is 5 things. So it's valuation, growth, profitability, momentum, and revisions. It takes those grades, puts them into a score, and then it says, hey, it's a hold here or a buy, whatever. It's a 1 to 5 score. Now, they're not making money. You can see the PE's, not there. When you look at profitability, 51% margin. That's great. It's okay. Nothing horrible. When you look at their growth, 24%, that's fantastic. But they're not making money. And that's the big issue. Now, this one might get a bump with rates going lower, might get a bump. I'm not sure exactly about how the business fares, but in my mind, I don't think this is, something that is 100%. When we look at this latest rating, a buy, and we can see this person, it's a buy, Shim Sung-un, Jin Zhang. I don't know how to look at this. I know I found it one time. Here we go. He mentioned it's a buy back here on July 3rd, up 1%, 1.16. S&P's up 1.6. Welbeck Ash said sell. Okay, Blaze changed to date 30%. S&P change up. I would say there's nothing that tells me that this is a good one, Lance. I hope you don't have a lot of money into this one because it does look like it's on the downside. I don't know what catalyst is going to bring it up. So in my mind, I just, that's what would worry me about this. What's the catalyst that's going to bring it up? Because stock price doesn't look like it's a catalyst to bring it up. It doesn't. It doesn't look like it's going to trade. Maybe some short interest. But again, with that kind of market cap, it's tiny. Nothing that I would want to invest in. But again, Lance, maybe you have more information about it. Now, scans. When you see me do scans, okay, I do it live on YouTube every day. But when you see me do scans, I use my scanner, okay? All of that stuff, everything that I use in Trendspider comes when you sign up for Trendspider. Remember, if you're at home this weekend and you're getting ready to start trading or doing your weekend research, use Trendspider. And if you haven't signed up for Trendspider, sign up for it. MPLX is one that showed up on a scan. Again, the initial entry was 41.49 here. Because of the algorithm, it says, hey, Bollinger Bands have gotten together. Here's the price action. It's up there. We might be going for another run. This is one that doesn't perform great in the algorithm. You make 12.5% versus buying and holding makes you 28.8%. What this doesn't calculate is that this gives you nearly 9% quarterly dividend. 9% annual is where it's calculated, but it's a quarterly dividend. And you can see we just passed the dividend date here. And I said when it was down here in 49, I said you're going to cover this gap up to 41.85. You might as well buy it. Again, when the dividend comes out of there, it's good for the stock price. CrowdStrike, we talked about CrowdStrike. ARM, 3M. I think 3M is an interesting one. Of all the Dow stocks, I think 3M is in the Dow. We talked about this 131 being a support level. It's gone past it. Can it hold it? It just got another MACD cross up. The Bollinger Bands cinched up. Since that gap up there, we've seen them cinch up. They're on the top of the 9-day. This one, not a crazy one. Not crazy at all. Algorithm makes you 21%. It got you in here at 104. Do you want to get in again? Maybe. Maybe it makes sense if that's in your wheelhouse. Now, I want to point this out because Schwab came up with a buy here at 64.92. Just got you out with a 0.46% gain. Not great. But what we're seeing is the Bollinger Band cinching up, the 50 days moving sideways, the 200-day is still moving negative. That's a little bit concerning, okay? RSI is a little high at 59. But when you listen to the algorithm, you win 41% of the time, but your total performance over 2 years is 35.6%. Buying and holding loses you 11%. Okay, so let's take a look at the weekly and let's see what we're using as support here. It is below its 200-day. I would argue this is a bank that will be breaking out again. And I think you have 75 in it again this year. Buying at 65, selling at 75. I think you're fine buying this on the 4-hour algorithm. Again, I probably need to add this one. Genius, Lockheed Martin. Some of the leveraged ETFs, the short Dow, SDow, got a cross up here. Got an entry, and it got you right out at 14.11, got you right out here. It looks like this one is short Dow is up 0.07 in trading. So maybe the averages have pulled back. Another leveraged ETF is the bear on financials. Real estate, DRV. Real estate has been on a tear. And that's why you're seeing this one go down. Do you want to think that, maybe real estate cools off and DRV is a 3 times levered ETF against the real estate sector? It's an interesting one. So, okay, there's your podcast. There's your week. We have Monday off. I may do some stuff this weekend. My plan is to record some stuff, some videos for the paid subscribers on the newsletter. So if you're interested, you can sign up for the newsletter. It's free during the week. It is paid during the weekend. I do have an education section where I try and educate everybody about how I use my system, how I use Trendspider, how I use charts. I include a lot of the stuff. So you don't need Trendspider. You can use your own charts. But how I use the PE, how I use everything. If we just go over here and look, and you scroll down to the bottom, confirmation, MACD, you heard me use it through this entire time. Cross up, RSI, Bollinger Bands, leveraged ETF, PE, cross death, golden cross, death cross, divergence, why a 4-hour time frame from the algo just works. Buy and sell over and under this price. How do I find the price? Stock examples shared. When to sell stocks, trading using candlesticks. All of this is in the paid newsletter. So if you want to support me, again, if you listen, I don't care if you support me. I'm just thankful that you listen. But if you're interested in that kind of stuff, then it may make sense for you to sign up for the paid newsletter. At the very least, I would urge you to buy the tools that I use because I talk about them enough that I think you can actually get some education just by listening and using the tools that I use. and the tools are Trendspider, and they're Seeking Alpha Premium, which, again, that's the second link, $25 off your membership. You get a free 7-day trial. Now, the third one that I use is Alpha Picks. These are stocks that I would never think to pick. It's a curated, data-driven portfolio. That's buy long-term. They have SMCI in there. They have Abercrombie & Finch. Both are down. We can look at Abercrombie & Finch. Is it a buy yet? Because on earnings, they got beaten down. Abercrombie & Finch is on our watch list. It hasn't there hasn't been a buy yet. But I would argue this gap up here to 164 will get filled. It was not a bad quarter. It was not a bad quarter at all. The problem that you have with Abercrombie & Finch is this. It is that 400 and something percent, let's see, 723% gain since Alpha Picks picked it, I think, since it broke out. But again, Alpha Picks, just data-driven stocks, stuff that I would never pick. And that's why I like it. And again, the performance is unmatched, 114% against the S&P at 38%. You sign up for 1 year, you get all of the analysis of all of the stocks that they have in the portfolio. You can even look at the ones that they've recently sold. So that's it. If you have any questions, hit me up. I thank you guys for listening. I hope you have a great, Labor Day? Yeah, Labor Day this weekend. I hope you're not traveling on Monday because I heard Monday is going to be crazy. So if you travel on Sunday. But if you have any questions, hit me up. Okay, thanks again for listening.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.